So before we go into the strategy aspect of things, I feel like we should talk about indicators, because if you have been trying to learn online, you've been listening to other people, you must probably have heard people talk about indicators. Some people, they use hundreds of indicators. Some people, they use less. So it's all part of technical analysis. So I feel like we should just throw some light on it. I personally, I really don't use indicators. Can I say I don't use? I use indicators for confluence, and I only use two, and I use them for confluence. Now, confluence is just a big word. What that means is I use them for further to give me more confidence in taking a trade in my direction. Now, I will take the trade regardless if the indicators align with my entry or not. I just use them for added confidence. You know. Now, the two indicators I use are I use the 50 exponential moving average. Now, if you want to get this moving average, just come to your trading view here, click indicators. Here, type EMA. You know, EMA, you find moving average exponential. You click that. I done this star, so I wouldn't have to go and look for it anymore. So if you start it, you come to the settings. Let me turn mine on. You also probably have a different settings. You can change the color to whatever color you like, but the inputs, I come here, change the length to 50, source closed, length 5, method EMA. They have the SMA, EMA. I just leave it at EMA and okay. Now, how do I use this? I use this as a filter to confirm my trend. Okay, if I feel like this market is in an uptrend, now, like I said, with or without this indicator, I know what the trend is. I just use this as an added confluence, and to give me more confidence. I can see that this market is on an uptrend. Why? It's making consistent higher lows and higher highs, low, high, higher low, higher high, higher low, higher high, higher low, higher high. Okay. So with or without this indicator, I know that this market is in an uptrend. I just like it for visual purposes. I can see that this market is in an uptrend. Okay. Now the EMA has just given me more confidence, because um, if the market is above the 50 EMA, you know, it tends to um, be in an uptrend. Not all the time. Again, the indicators could lag, but just humor me. The market broke below, came here, broke back above, stayed above, uptrend. Okay, it came here, broke below, stayed below, downtrend. It came here, broke above, stayed above, uptrend. Spiked below, came back, broke back above, uptrend. So I just use this as a filter to give me confluence when I'm making my analysis. The second one is the Fibonacci, and I use the Fibonacci even less. Okay, if you come to this line of tools here and you click here, you find Fib retracement. I start it once again so that I wouldn't have to go to this point, to this place every time I'm looking for it, and I start it here. So if I take the Fibonacci, first I'll give you the settings I use. Okay, I'll leave this style so that you guys can screenshot it, copy my own if you like. But the only levels I'm interested in are the zero point 0.5 and the 61.8. The negative 0.27 is for targets. Okay, sometimes I turn this off because I usually target the recent highs, so I really don't use that level. But these are my Fibonacci level. Now, Fibonacci is simply a tool you use to gauge a retracement. For example, we're in an uptrend over here. Let's see if I can find a good example to use Fibonacci tool. Um, we're in a downtrend over here at this point here. If you look at the market, it's making from high to low to lower high to lower low to lower high to lower low, lower low over here. Now, say I was looking at this market in a downtrend, okay, and I'm looking to get into a position on this market. This is the point where the market broke. Just focus on, let me see if I can use the replay tool on this region right about here. This is the area where the market broke below and it's coming back to retest this area. Let's go down to the 4 hour time frame. Now on the 4 hour time frame, if you look at this area really closely, this is a break and a retest region. I would naturally be looking for a bearish reversal in this area to go short, but I could also take my Fibonacci from high to low, and you can see that the market has pulled back perfectly into this 0.618 and uh, zero point 0.5 region. I'm already looking for a bearish, like remember, I'm already bearish on this, but now look at what the indicator is doing. Right here, the 50 EMA is at this point and is rejecting this area. See this engulfing candle here close below the 50 EMA. The market has pulled back to the 0.618 region. I would have the confidence to get involved in this market because also look at what is happening. I've gotten my entry signal. This is an evening star formation. I taught this in one of the videos. This is an evening star formation right here at this region. I can have enough confidence to get involved in this market, stop loss above, and take profits at the lows. Okay, now let's play. See now, what did I remember? I am already expecting bearish selling pressure at this region. Just have that at the back of your mind. I'm not entering this trade because the EMA came here and the Fibonacci. No, I'm already expecting bearish selling pressure at this region to go short. But when you're trading, it's always smart or wise to use all the tools in your arsenal to give you the confidence. So you'd have the confidence, one, to enter, two, to hold your trades. Now, I have the EMA turned on and see the EMA came here, rejected this region. The market came here, gave me an evening star formation. I've gotten my entry. He came here on top of my entry again. He rejected the EMA and closed below it. On top of that, he pulled back to the 61.8 region and did all these things. Haba, this is what I say confidence. This is what I mean. This gives me enough confidence to enter this trade and hold it to my take profits. Okay, so I just use indicators as more confluence again to give me confidence to get involved or to hold my trades. I won't say, oh, the market broke the EMA here, I'll sell. The market broke it here, I'll buy. That's not how to use an indicator in my books. I already know what I'm meant to do. I just, you know, in my journal, when I'm journaling and I'm writing my reasons for entry, these are going to be things that give me confidence to enter the market. Okay. Now, even if this indicator had come and it was not rejecting this area, if the indicator had come, let me use this drawing tool, had come and the indicator was somewhere here, but this market was doing this thing here, I will still enter. I will not say because the indicator is here, the indicator is doing this, I will not enter my trade. I will enter. I'm just using this for further confirmations for my entry. So with or without the indicators, in fact, most of the times I do not use it. I just use them to confirm my bias. What I already want to do, I use the indicators to confirm. You get what I'm saying? So that's how I use the indicators, and that's how I feel like the indicators should be used. Do not try to um, take a trade. Oh, because I told you I use the 50 EMA. Now, once you see that the market close above this region, you buy. Just imagine that's your strategy. Close above this place, you buy. Stop loss under here, you make money. Abi, take profit smashed, you make money. Now, watch. It broke below here, you sell. Stop loss. See where your stance, your stop loss is probably around this region. Come, it takes you out. It broke and closed above here again. You That is just not going to work. So you see how I use this. I use it as extra confirmation, extra confluence for what I'm already expecting from the market. So that's how I expect you guys to use the indicators. Now, having said that, we'll go over to the strategy part of the video in the very next segment. I'll catch you guys there.